Hey everyone, John Henry here, Slingshot Futures Trading Group, SSFTG. Welcome to the video. In this one, if you couldn't tell by the layout, you gotta love it, right? It's pretty obvious when it hits. Those white backgrounds make it pretty obvious. We're taking a look at the candle-by-candle market psychology and looking at what is going on inside of each of these candles and what we're sort of interpreting is happening. So with that in mind, we go into the first candle and we kind of, looking at the way that this is moving around, we've got a very nice downward slope. Very aggressive bearish move to the downside, but it seems like they ran into a bit of trouble. Obviously, right about here at the base of this ginormous bear bar, they found a huge amount of support. And when the market came back down to that support, and I say they found support there just as a side note because of, well, the amount of bouncing that took place there, that type of movement usually puts a cap on what's going on. So what we really kind of want to pay attention to is the top and the bottom of that really gigantic bear bar, because that's going to be sort of the line in the sand. Right now the market's in the middle, but you can see it's starting to kind of creep its way up towards that 44.8475, and that's going to be the spot that it's going to have to really break out and prove if it's going to continue further up. The bears are very likely still going to maintain their emphasis to the downside because, well, why wouldn't they? They have a really strong bear move and they don't even have a new high. That hasn't happened yet. Nothing has proven them wrong. So realistically, this first move up, it kind of makes sense to see it land a bit weak with all of this wick on the top, because a lot of sellers will be looking back to the previous day thinking, well, got a zone to sell here, we've got another one to sell inside here, there's very obvious resistance up here. There's a lot of defense that they can put up on this rise to the upside if they try to get it going. So it just makes a lot more sense that we see the sellers try to fill this gap in, try to push a little bit further down, at least down to the lows of this first bull bar. Nice little inside bear bar, and this would potentially be the spark to the downside. This is what sellers want to see, and you'll notice from the last candle's close to the current candle's open, we have downside gapping. That would further suggest that there's a lot of emphasis to the downside that's building up here. The buyers, if they were in, are trying to get things going here, and if we look at the first 5 POC, let's see where it's at. The first 5-minute POC is hovering right there at 79.25, and the market is closing underneath that. If we bring this further to the next 5-minute bar, we're still closing underneath that. So we've got some definitive problems for the bulls, and sellers are going to be looking for the downside to continue. The downside would be triggering in underneath underneath this last candle and looking for the downside. Now, if we look at this from a risk-reward standpoint, if I were to put my stop above the highs, there's no way I can fit even a 2-to-1. Like, it just does. It's way down here. That doesn't even fit into settlement. So the only way that we can really look at this is from a scalper's perspective. It's got to be a short underneath the bear bar, but only down to the lows. And that's why the low of this candle is going to be a big zone of interest. If it breaks through, then they've got the next spot. But we'll see. Oh, okay. So the bears never even triggered in. And now we have another bull. Well, actually, it's not an inside bar. That was a double bottom. A little micro double bottom inside that candle. So interesting. Okay, so the sellers have not been triggered in, which means that nobody's necessarily trapped or feeling any pressure from this bull bar. And that really kind of allows the bulls to come in. Anytime there's a situation like this that looks like an absolutely perfectly logical, absolute short or long, and it doesn't trigger, usually the opposite side goes. So I know we've got a lot of weakness on the top of this bull bar, but given the fact that that did not trigger to the downside, and a lot of shorts will have been looking short, they know that they've got a shot to take this back up. Now, again, here we've got to be realistic. Like a 2-to-1 is way up in the stratosphere. That's not going to work. We're going to have to approach this from the same mentality of a scalper. And again, the target's back up to the highs. But this makes a lot more sense, especially with the sellers not getting triggered in. Beautiful pop back to the upside, immediately fills the objective, and you'll notice it closes almost all the way back down to the entry point. A lot of traders may buy off that. It did technically still close above it, but I think honestly, let's be real here, a lot of traders got their targets filled on that pop. The only other scenario would be 2-to-1 traders next, and that's a long shot away. It makes more sense that these were scalpers. The scalpers filled their targets. It couldn't even close above it. And again, we've got all these zones of resistance from before. It doesn't make sense to be much more than a scalper here, and it fits perfectly. So with this bull continuation to the upside, we have to kind of evaluate, what's going on. We do have that continuation up, but where's the POC? We are finally closing above it. So the bulls have now finally proven themselves, like, okay, the shorts had a shot. They never triggered. The bulls then had a chance to reverse it away from the bears, which worked out beautifully. And now that candle that reversed it away from the bears, even with all of the weakness on the top, still closing above a POC now. That has to be important. We've got to pay attention to that. Now, if this immediately closes right back down again, twin reversal, probably a failure. We're probably not coming back. We've got to really pay attention here because these gigantic wicks on the top make things a little bit awkward. Speaking of gigantic wicks on the top, there's another one for you. Hey, we do have some really funky candle gapping going on wow, every single candle. We've got a gap down, we've got a gap up, we've got a gap down, we've got a gap down. That's a little bit weird considering that 3 of the 4 gaps that we've had so far are down and the market is trying to churn higher. We know that the sellers were trying to get going, but they weren't ever triggered in. So that's why it's kind of weird. Like, well, wait, if they weren't ever triggered in, maybe this is a little bit of a clue that something's wrong. Something's kind of churning in the background, if you will. Now, we are still closing above the POC, and we are separating away from the POC, which is fantastic. We are going into the 10 o'clock top of the hour, and I believe there's Powell news coming out at 10 o'clock. Maybe that's what this volume is kind of preceding, giving us a heads up that, you know, something may be wrong here. But at the moment, the bulls are trying to go higher. We are closing above the POC. Realistically, buyers will be buying underneath this for a continuation up. Again, this is another situation where they have no idea how big the risk is going to be. So they've either got to put it underneath here, or they're going to put it underneath the last bull bar, right? These are swing traders. These are scalpers. Putting it underneath this, there's no way the probability can be better than 30%. It's just not going to fit. So I've got to make sure that if I'm going to trade it that way, I can at least fit a 3-to-1. Otherwise, it's not worth it. And a 3-to-1 doesn't quite fit. If I were going to take that, I would have to modify my entry to at least 79.25 to compensate for the probability. Which means that I'm going to take this as a scalper. Makes a lot more sense to have a stop down here because I don't know how far the market's going to go. But I do know that if the market can pull back to this POC at the very least, that's going to be the zone of interest for continuation on the bulls. We do have that 10 o'clock stuff coming around the corner. That is a concern. And the underlying volume was telling us that something may be wrong for a deeper pullback, a deeper dip, maybe a reversal. So there is some caution here, which I think is why it makes more sense to be a scalper, because we don't know how far down it's going to dip. Okay, so it did end up pulling back and the buyers picked it up off the lows. It didn't turn out to really dip that far. I thought it was going to dip a little bit further than that, but in terms of the buyers picking it back up, they're aggressively buying into it, shoving the market back up. And if we look at this from an actual risk standpoint, we could even say, you know, maybe they're trying to get, well, 3-to-1 doesn't quite fit. How about 2-to-1? A 2-to-1 actual risk does fit inside the highs. Now, again, these are different ways to modify a potential scalp, but the scalp or the 2-to-1 actual risk, they all kind of line up right around the same zone. And again, the original intention of the trade is a scalp back to the upside, which, you know, I don't know if it would have actually filled. The wick tested it, but, you know, who knows. Either way, we've got a really nice bounce off of that, and they're demonstrating further support. If we continue this a little bit further forward, we can see that the POC is still staying underneath it, so that's good. Everything is demonstrating some strength. Bulls are still taking over. The sellers lost it. Woo! Okay. So, there's that bull bar. Jeez, oh Pete's. Wow. So that's the Powell news, I guess. In terms of the overall movement, this is why a lot of traders, when they know that they've got something going, will opt to take wider stops and just say, you know what, I don't know where this thing's going to go, but I know, generally speaking, where it should go in the end. And, well, this is why. When it does follow through, you can get some really, really big runs going into those news announcements. Wow. Now, in terms of this gigantic bull bar to the upside, we do also have a couple other caveats to look at. Remember, while this market is driving lower, scalpers will have already maybe gotten their targets off. I don't know if they got filled there or not, right? I know my luck, I wouldn't have been filled there. So I'm going to go off of my luck's scenario and say that I didn't get a fill there and the market closes down here and now it jerks all the way back down. So we've got to play this realistic, right? Let's put this back up, and I would, potentially look at this and say, well, okay, here's the thing. We had to risk all the way down to here. The scalper's objective was taken out. Regardless of where you were putting your stop, whether it was actual risk, whether it was below the lows, even if it was down underneath the previous swing low, it literally doesn't matter. All of the scalper's targets were hit. Now, in terms of wider objectives, going further, where might this go? Well, we've got our actual risk. Let's see where actual risk 2-to-1 lands. That went through that. Okay, let's go for actual risk 3-to-1. We're not quite there yet, so that would be the next major objective that the market is going to be hunting for to try to finish this job off. Now, this is obviously a massive move to the upside, and if shorts were in, remember those shorts who were trying to sell over here? If they did get stuck selling too early, they were still given a chance to get out of break even. These little nuances, these little caveats give us all the info that we need. And that little nuance right there suggests that the next pullback, even after a gigantic bull bar like this, which you would expect to pull back given that it's turning into resistance here, it makes more sense that it either stalls here, goes a little bit sideways rather than pulls back too far. From an L perspective, if we're looking at this from the regular, the brink cycles, if you will, from the bottom to the top, it would be like an L1, L2. You're not looking for anything huge or crazy. You're just looking for kind of a regular little kind of dip inside there. We have more continuation to the upside, but it doesn't quite hit the target. It misses it by a tick, in fact, and then pulls back. There's that little dip that we were talking about again that gives you, let's see, perfect L1, actually. An L1 rejection right back off. They're still looking to try to fill this objective. And remember, if we go backward just a little bit, we've got a previous settlement price, which is also a previous gap, which tested this top to the tick. So it does make some sense that we're finding some resistance here, but overall, it just feels like it's kind of for nothing. The bulls have so much control right now that any short interest that is in, they're probably stuck from way back here, right? And notice that's where the POC is, interestingly enough, is just all the same spots. We're looking for that 3-to-1. Ooh, okay, so big breakout above the 3-to-1. Very nice continuation up, and we're breaking above the previous swing. We're breaking above, a lot of stuff, even double topping off the major swing from way back here. So there's a lot of bullish intent here. A lot of times when the market is breaking out this aggressively and they're breaking above 3-to-1s, the next objective isn't a 4-to-1, it's a 5-to-1. And a 5-to-1, that's way the heck up here at 45.03 Now, that's a pretty long shot from where we are right now, but realistically, we're going into 10:15. We've got a little bit of time, and the market has a POC that's way at the bottom. The bulls are still heavily in control. It makes sense. More continuation up. Now they're gapping from candle to candle. Little bit of a concern, though, that they left it behind. This is one of those gaps that I would consider not filled because, well, the gap was here and the market kind of came down and tested it, but it never actually traded through it. So this is a bit of a concern that the market might want to come back and try to backfill this a little bit. And if it wants to pull back a little bit further, a gigantic brick bottom base, that's also the bottom of that bear bar, everything stacks up for support here. Now, I know the market's screaming away to the upside, but I don't want to buy way up here. This is the assumption that longs are still in from down here, rolling the market up. So if traders are looking to reload, they're not going to buy way up here. It doesn't make any sense. They've got to buy in a dip. Starting to see a pretty heavy bear bar getting close to those 5-to-1 objectives. It makes sense, right? I mean, when you're reaching out to a 5-to-1 objective that close, a lot of traders just say, yeah, you know what? It's good enough. That's good enough. Let's see if there's any POC shifting. There's no POC shifting, but we can see there is a lot of volume starting to stack up as they get closer to those 5-to-1s, and they're doing it in very obvious breaks. Let's see what they want to continue as, but the market will be looking to pull back, backfill this gap, maybe find support on the previous shelf. Bulls are still looking for a reason to come in, though. Nice dip down. Buyers do end up supporting that dip. What time is it? We're going into 10:30, so let's just round off the rest of the morning and see if they can finish this objective off. But the bulls are coming in on this dip. The next zone of support is going to be the 92s. Inside support. There they go. Ooh, they didn't even make it to 92. Made it to 92.25. Oh, man, typical Murphy hovering in the bushes, huh? Anyway, we've got more continuation to the upside. Oh, double top on the highs. Didn't quite get the job done. Stalling out with a doji. Sellers may try to take that, but remember the context. The 5-to-1 objective is still open. We're getting some downside candle gapping that makes sense. Buyers are getting nervous. They don't want to give up this whole target. Very weak on the trigger. Bulls start churning back to the upside. That's not going to give bears any... That's not going to prove anything to the bears. We've got a doji. So if bears are short, they now have 2 candles that are closing above their entries. Any dip is likely going to be them just exiting now. But realistically, let's see where the volume is. We've got a POC shift to the upside. So the POC is shifting to the upside and the market is stabilizing underneath it. So if the bulls are going to continue, this is where they've got to get it done. We're hovering around this POC. There's a lot of potential concerns from a lot of bulls who don't want to give up this big target. Okay, big flush to the downside, and that shows you they're concerned a little bit. Right now, the bears here really didn't prove anything because this dip back was just gobbled up like it was going out of style. Big old wick on the bottom, but realistically, we're still closing underneath the POC. The market's kind of hovering here, going nearer to lunch at 11:20, and with this big bear bar to the downside, I mean, they're not proving anything. And now they've got a doji. So this is just, if bears did short underneath this, what emphasis do they have? What proof do they have? You know, like no shorts are going to sit in this thinking, oh yeah, this is the one, you know? Like, it's just not feeling that way right now. Well, okay, bite my tongue. It might be feeling like that right now. Now, any bears who weren't sure, they may choose to sell underneath that, but here's the next problem. We've got that brick bottom here and here, which previously has already demonstrated support. That's creating a big pocket of support that the sellers are going to have a really tough time getting through. So sellers may choose to come in here, but it's more likely going to be a scalp. Or it doesn't even trigger them in. Once again, we just talked about this. When it doesn't trigger them in, what do you expect? You expect the opposite to happen. The reaction. They didn't do the first, so they're probably going to do the second. Bulls are likely going to trigger in here and try to carry this on up. And this may be the final run for that finishing touch all the way up to 11, to that, sorry, I was looking at the price level, 45.03 quarter. Nice bullish continuation. More bullish continuation. And breaking, oh no, they didn't get it. They missed it by just a, what, a tick? 2 ticks? Yikes. Missing in a little bit here. Again, a lot of traders will be taking profit as they get closer. They're failing to close underneath that last POC. There they go. Now they finally got the job done. Bulls finally finished the 5-to-1 target. Now, if they're going to go sideways or put in a little bit of a top, this is more likely from here on out where it's going to happen. I'm not necessarily expecting the market to go further once it's achieved a 5-to-1. It has a very hard time going further. Not to say that it can't, okay? But usually that's when it's going to start rolling into the end, and it's already going into 12 o'clock lunchtime. If we drive, wow, it does keep going further. Well, okay. So we can see that it's sort of the beginning of the end, and the market starts going sideways into the afternoon. But really, I mean, man, that made it up to probably a 7-to-1. Okay, maybe not 6.5-to-1. Yeah, well, close enough. 6.5-to-1 about. Really, really strong pulse to the upside. So, incredible move to the upside. And again, everything was sort of given away once they started shifting above the POCs. That was a really obvious sign. But even with the sellers trying to come in, every time they tried, it was weakness. It was weakness. And when they did show up to the party, nobody got triggered in. And then it reversed the other way. Those little nuances, those little clues are what will tell you how to approach these types of days. As always, if you have any questions, feel free to drop them in the comments below. Or if you have a more detailed question, you can always shoot me an email as well, jhb@ssftg.com. Hopefully you found it useful, interesting, entertaining, and until the next one, we'll see y'all then. Thanks.